Tonight, we're going to be talking about finding the right properties. When we're finding the right properties, there's a couple steps I want you to follow, and every single one of these are going to be extremely important for you to find the correct market. If you are in a different market, which most likely you will, this might tell you that you may need to look in a different market that's nearby because of its possibilities. And you want to make sure that you do this research, because this way you're also going to mitigate risk. You're going to lower the risk of acquiring a bad investment, which is one of the things that you want to avoid at all costs. So the first thing is going to be a throughout market analysis to identify the properties that we want to flip. Number two is going to be distressed properties, how we're going to find them by using the online resources, because a lot of things you can do online nowadays. How to calculate the MAO, which is the maximum allow offer that you will make to the seller. This is extremely important because based on this, you truly make your money when you are buying the property, not when you're selling. So this is extremely important. We're going to go over that multiple times throughout this course, because once you have it, once it becomes second nature, you're going to be able to calculate right away, especially how much money you want to make, what's the offer going to be like, and so on. Conducting a property inspection to determine the scope of necessary renovations, basically exactly what you need in order to calculate how much is going to require for you to flip a property. And then of course the role of home inspection reports. We'll get into details about why this matters, and strategies for financing the purchase and renovation. A lot of these things we're going to keep repeating throughout the course, but this is the first initial step in order to get started. So just a quick overview, the risk and reward. The reason why you want to make sure that you learn all the things that we're going to be going over is because if you get a bad deal, it can really ruin you. So in every single investment that you find, there's always risk. However, it's up to you to do your homework and make sure that you're mitigating, you're lowering the risk every single time, so that your reward is huge. So the reward that you get is going to be completely based on what you expected that it was going to happen. So this is extremely important, the risk and the reward. The reward by finding the right property are tremendous. So performing a throughout market analysis to identify potential properties for flipping, we're going to use resources such as Zillow, because on Zillow you're going to be able to see the prices that the properties are going for. There's also Redfin and realtor.com where you can find the properties, but specifically I rather use Zillow for that purpose. We're going to be using Rentometer because again, this is part of analyzing the market, about making sure that if you're buying a property and you want to hold it just for a little bit and you want to rent the property, then this is going to help you determine whether you're getting a property at a good deal or not. Redfin has a lot of tools for estimating and understanding the market, which we're going to go over for you to be able to learn on how I use this and how you can implement it in your own market. And then realtor.com, because it uses market trends. It talks about what are the hottest cities, the coldest cities, some of the areas that are going to be good for investing, which are not going to be good for investing, and so on. Again, you want to learn this because, especially if you're thinking about scaling, you want to look at these different markets for you to be able to invest. And the other reason is because some of you may not be in a really good market. So what you need to do is determine which market closest to you is actually currently hot, so that it's not too far away from where you're at. This could be your first investment, your first flip. And the reason why this matters is because for you to be able to start your first own flip, you want to do it as locally as possible. I'm not saying it's impossible not to do it locally, but it is better. It is better for you to get that first experience and then scale it to where you want to do different markets. Okay, so we're going to start here on Zillow to determine the average market price, right? Depending on the criteria. So I prefer that you start looking for properties that have 2 bedrooms, 2 bathrooms, because these are the ones that are going to sell the easiest. Of course, if it has 3 bedrooms plus, then it's going to be even better. But you don't want to do the small houses to start with, because it may take a little bit longer for you to be able to sell this property. So for example, if you do a 2-bedroom, 1 bathroom, it may take just a little bit longer for you to be able to sell the property. I'm not saying it's not impossible, but it is, again, you want to decrease the risk and increase the rewards, the possibilities that you're going to be able to get a really good deal. So let's take a look at this zip code here, and then let's find an average property. So to do it on purpose, I'm going to select the number of bedrooms, which is going to be, let's do 2, and then bathrooms, let's do 2. So we apply this. Okay, so here in Zillow, we're going to look for a property that just recently sold, okay? So it needs to be something recent. So let's take a look here. This property sold here recently. This property here sold recently as well. So let's take a look at it. Let's see if the property was rehabbed. So this property, they did put some work into it, okay? It seems like they painted the house. The house is a 2x2, has 1,000 square feet. It sold for 365, okay? So this is what we're gonna go by basically. Now the property has appreciated somewhat. Actually, some really good quantity over here that appreciated to 433. But again, this is not always an accurate number. You have to do your own research, right? But we're going to use this as a guesstimate, okay? As a guess. However, the property sold for 365, so this is the real number that we're going to go by. This is exactly what we're going to follow, meaning that if we find a property that's a 2x2 and it has close to 1,000 square feet, maybe 1,200 or 800 square feet, as long as it's between that range, that means that we know for a fact we can sell the property for up to $365,000, okay? And by that, it also means that this right here is going to be the maximum price that we can sell the property for. So you do this research, because if you find a property, I'm going to give you an example. You find a property and someone comes to you and says, hey, I got this property here in Miami, zip code 33127. It's a 2x2 and it has 1,200 square feet. It needs rehab, and you can sell the property for, it needs a rehab, and you can sell the property for $400,000 once you repair it, and the asking price is $340,000. That's something that I will really try to avoid. Because I mean, what if you have to put $30,000, $40,000 into repairs, and then you can try to sell the property for $400,000, but there's a couple of fees you have to pay. You have to pay closing costs for the most part, which is around 10%. So you're already cutting yourself short, and that's something that you want to avoid. So again, the reason why I like looking at Zillow to the properties that recently sold in the zip code that I'm searching, because it's my local zip code, I'm making sure that the maximum prices that I can sell a property for once it's fully rehabbed. And you want to do it based on the most recent sales, okay? So look, here's another property similar to the one that we just checked. Property sold for $400,000, basically $399,000. Okay, so it seems like this was the old picture of what it looked like. Has a nice patio, so they definitely did some things to it. This looks really good here. The inside looks really cool. They did some additional things on there to make it look even more designable. It's a neat house. It's in Miami, really good area. They did a decent job on the kitchen. Very interesting paint that they did over there. So the property is very unique, and it sold for $400,000. The estimate is $431,000. Now, so we know that if we find a property, again, close to this, in that same zip code, the maximum that we can sell the property once it's rehab is going to be $399,000. So again, you're going to go by what's the maximum that you can sell a property if you're going to buy it, okay, so that you can flip it. So now let's take a look at the history of this property. Sometimes it has the history here. So it seems like the property sold for $178,000 back in 2021. So these people put some money on there. They probably had it rented, and it made some good profits. Now look at this right here. The property was at $425. That's what they were trying to ask for the property. and once they couldn't get to that price within a few weeks, they changed it on the 24th to $399, and then they were able to close on the property for that price. So this is a good indicator that the maximum price that you can sell a property is similar to this, similar to that size, number of bedrooms, number of bathrooms. It's just going to be around $400,000. Okay, so here in rentometer.com, what we're going to look is we're just going to see the average rent based on that same criteria. There's a couple reasons why. Number one, you want to see if this market is also good for renters. Okay, so I know for a fact Miami is really good because a lot of people move into Miami for the first time, or just people coming from different states. They want to go to Miami. So it is really good for you to always know what the average rent is going to be for these, because sometimes, just sometimes, some people want to buy these houses off of you just as a opportunity for you to, for them to rent the property, right, and just make some additional income. Now, this information is going to be extremely important for you later down the road, and again, I'll get into details on why, but you want to know this now. You want to understand what is the current price of the rents. So the first thing we did is we were looking at the average prices for a specific type of houses. Now we need to determine what's the average rent, how much they charge. So let's go here. We're gonna go to renter, okay, professional. You're gonna have to sign up and so on. When you do it as a renter, it's completely free. So let's say you just do a quick guess, okay? So let's say it's $2,000. All right. Rents in Miami are a little pricey. So let's do, this is what it allowed us. Okay, so we're gonna look at the zip code of the properties that we were just looking on Zillow. Okay, and then we put here that it was a 2-bedroom. This is the best option that it can give me. So let's do one bathroom and a half. So we're gonna go click on check. This is gonna give us an idea. So the average rent, okay, the average rent in that area, it's about $4,200 right now. So you want to write that down as your market analysis, okay? Now let's go back to Zillow. I'm going to show you something really quick. And we're going to find the property that we just saw, okay? So we just saw this property, right, that recently sold. Let's calculate, well, let's use this information to see what the average mortgage is. So look at this. The average payment on a mortgage on this type of property for that price is going to be about $2,400. So usually this doesn't have taxes included. This doesn't have insurance included, right? But again, this is going to give you an idea that you can also market in that market specifically. You can also market this property for real estate investors, because if somebody comes in, right, and they purchase this property at this price, and their mortgage is going to be, let's say, about $3,000, then that means they're making close to $1,000 in just passive income. So the reason why you want to know this is because you want to understand your own market. This is not going to be the case all the time, okay? Sometimes you're going to find properties in a specific areas where when you look at it and you see the asking price, let's say it's $399,000. We're going to use the same example, and the mortgage is $2,448. Right, this is an estimate. And then when you look at the average rents in that area, it's about $2,300. So see, you can't market that property to real estate investors. You're definitely only going to be stuck, or not stuck. Your only possible buyer is not going to be an investor as well, but also it's just going to be a person who wants to live in the property for many, many years. And you want to keep this into consideration because, again, a market that has high rents and great average on the flips, that means you're in a really, really good market. But if you're in a market where only it's best to buy and flip, then you also want to understand that, right? And vice versa. There's also going to be markets that are really, really good for you to rent and not really sell to first-time home buyers. So that means that you have to get them even at a cheaper price. So you hold these properties and then you just rent them because it's just better to rent. Most people rent in that area. So you want to make sure you use those resources just to understand the average market, okay? Okay, so now that we are on Redfin.com, we're going to use this tool to find and understand your own market, okay, depending on the area. So we're going to continue with the Miami area and the zip code that we were working on, okay? First thing you do is you go here and buy, and then the next thing is you're going to go here to US housing market. So again, this is going to be for us to understand the current market trends, all right? This is going to help you understand whenever the market is going up in your area or is going down in your area. Again, this is extremely important because no matter where you're at, the market is going to be completely different. So for example, let's say that we are going into a recession, but there's a couple cities that there's a lot of development going on. So these places are not going to feel that recession right off the bat. It may take a year, 2 years for that to even happen in that area because of the developments. Now, you want to understand every single thing that you can about your own local market so that you define where you're going to be investing. So again, we go there, we go to buy, and then we go to US housing market. Now, we're going to use the same example that we were using on the zip code, which is 33127, and it should be Miami. Well, let's click search. And then this is what you want to see. All right, you want to look at a market that has a trend of going up every single time. So this trend you can actually do it in 1 year increments. So it seems like it stayed a little steady for the past year. And even though right now, as of right now, the market is a little bit undecisive because of the higher interest rates. When back here the interest rates were really low. Over here, the interest rates are really high compared to what it was last year. But the good thing about this is that it has maintained consistency. The price of the houses have not lowered, meaning that you can get a really good deal in this market, right? Because even though the interest rates are going higher, it's not affecting the fact that the price of the houses have maintained about the same. This is also really important for you to look at, okay? Because depending on how much money you're asking for the property that you are rehabbing, the average market days on the market is 64. So usually when it's more than 40 days, 45 days on the market, that means that the market, it's a little bit slowing down, okay? So it's taking a little bit longer for you to be able to get your returns and make your money on the investment. And you want to keep in mind that you want to keep this in mind because it's extremely important that you have an average and you understand how long it may take for you to rehab a property and how long it's going to stay on the market possibly. Now, there's a couple things that you can do to mitigate this. For example, let's say that you got the property at a really cheap price, really good price. You didn't invest that much money on the rehab. So you can ask maybe $10,000 less than the average market value, and then your house is going to sell really quick, right? You can mitigate this as many ways as possible. But this is for you to understand that there's a possibility that it may take 2 months for you to be able to sell the property once you put it on the market. So the average hold time in this market, again, depending on how much you're going to be asking for the property once it's rehab, is going to be about 90 days total. And you need to understand that it's going to take about 90 days for you to be able to complete and sell the project from the moment you close on the property and started working on it, from the moment that you sell the property. Average 64 days in that area. Every market is going to be completely different. Okay, you need to understand that every single market is going to be completely different. Don't be surprised if you are working in a market, a local market, where the average median days on the market is 30 days. It depends on where you live. It depends on where you're searching. It depends on the area that you want to invest in. Another thing that I really like here is that over here, it tells you even a little bit more specifically. So for example, here it's telling you that it's taking 76 days total. So this is in the area, right? And then this is a little bit more local. All right, so here specifically in that zip code is saying that it's taking 76 days averagely for a property to sell, for a home to sell. And then it says the market there is somewhat competitive. So this is going to give you actual information. So here, it's from a scale to 0 to 100. and it's calculated over the past last 3 months. So this is very accurate information that you get here. So of course, if the closer to 100, the hotter the market is. So right now it has slowed down a little bit in that area. It's telling you here that some houses get multiple offers still, so which is a really good thing. The average home sell for 3% below the listing market, which is why it says that it's 77 days. So this is my example of me telling you, you got the property at a really, really good price, really cheap, and just ask $10,000 less, right? So that you're cutting off the average days that it takes on the market. Hot homes can sell for 1% above the listing market and go pending around 37 days. So again, this is really cool information that you can use to analyze your own market. Is also giving you example here of different houses that sold recently, June 7th. So this one actually just recently sold. Here's another one here. Of course, it depends on the property, depends on what you're looking at. Everything is based on the specific type of houses. Also, the schools are extremely important because the schools that has higher qualifications here, 6 out of 10, 5 out of 10, it just means that more people like to live there. Okay. Now, on the average, anything from above a 5 it may be a decent location. It's an average location. Okay. It's very unlikely that you're going to find higher schools that have a 7 score. Very unlikely. So I want you to understand that, because it's important that if you're looking at anything that's close to a 3 or a 2, that means that the area is not that good. And whoever is becoming a first-time home buyer, they look at the schools because they want to make sure that their kids are going to be in a really good school. So it's extremely important because it's a decisive factor that people implement when they're searching for their first-time home, for their first house. So elementary. So this one right here is actually pretty bad. See, I wouldn't even take my students to that school because of that. 5 of 5, high school. This is actually a really good school because it has a 7. So again, the area, the market, everything is extremely important that you analyze. All right, so this is information based on climate impact. I really don't look at that very often, but it may be information that you wanna read, you wanna study, right? So it seems here that one of the reasons why is because insurance can actually go extremely high. So I guess it's really good for you to understand that. There's more information here about the area specifically. All right, so flood insurance is going to be extremely important for that. Transportation is walkable. So this is really, really good information that you can get from here. And as you can see, this is a really good tool for you to understand that market specifically. Look at this here, homes sold above the listing price, over 25%. So that happened, yeah, of course, happened over here. It went down when the interest rates start to increase, but as you can see, they're going up, even though, understand this, even though the interest rates from here to here are actually currently higher, you can still see that some of these homes are still listed over the asking price. All right, they're selling over the asking price. Cut that. And you can see here that these properties are selling over the asking price for the most part, which may be one of the reasons why it's taking 77 days averagely to these properties to sell quickly. All right. So again, this is really good information for you to be able to understand your own market. Implement this as much as possible, because this is going to help you become an expert, especially when you're analyzing for the first time your own market. You need to understand how it works. You need to understand what's going on in the area, and you need to understand in order for you to take action or determine whenever this local place where I live is not a good place for me to be able to invest in fine flips, or I'm going to need to find a different location which is close by so that I can implement everything that I'm learning. All right, so the next thing you're going to be doing is you're going to search the market trends. So this is going to help you determine how hot or how cold the market where you're currently at is. And again, you want to understand your own market. You want to make sure that your market, you analyze it to the deep level so that you know and you understand what's going on in the area. All right. So one of the first things you're going to do is you're going to click here, and then you're going to click on research. When you click on research, it's going to take you here to economic research, and then you're going to hit on reports. When you hit there, you're going to do local market trends. After you do local market trends, you can analyze all of the other ones, all of the other options here. But let's try this one here first. On the local market trend, we were looking at the specific zip code. However, this is actually going to be a little bit more of your area, or the area that you pick. So right now it's giving us information about California, so we want to change this to Florida. And from Florida, I guess it's giving you information on all. This right here is the Miami area. And here you want to also change it to Florida. So we go here. And then we're going to find Miami. Where is Miami? Here we go. Miami information. It's right over there. This whole area here. And then this is going to show you the specific area. So, all right. So now we know is this whole area over here of Miami. So this is the same thing, the same information here. Okay. So this is what we want to look at. The average price, the average listing price in there is $591,000. Of course, this is very broad information, but you want to look on the fact that on the last option where it says medium list price has gone a little bit lower. So anything over 10% is not bad, to be honest. Anything below 10 minus negative 10% is still a really good market. Anything above that, it's going to be a little bit of a cold market. Okay. Now, as you can see, the medium list price, so it gets even redder here. It goes higher. So this area right here is a lot higher compared to this here. But this is telling you that the average price on the property, some of the properties that you can find are going to be $232,000. Now, when you go down here and we're looking at this area specifically, you can actually see percentages of all of these properties. So for example, here, Lake City in Florida, the prices there have gone up 13%. So that's actually really, really good. It's a really good area for you to be able to invest. Now here, same thing, over 10%. Now let's look at a area that has this area over here. It's a minus 14%. So this area, a lot of the home prices have gone down drastically. It does not mean it's a bad area for you to invest in. It just means that you're gonna have to get your property at a much cheaper price for you to be able to invest, so that this right here does not affect you. Because when this is in a negative, in the negatives, there's a couple things you need to understand. You're asking a really good price for the property, okay, and it goes down. Basically, you have to ask less and less and less every single time. You have to ask less and less and less every single time for you to be able to sell this property quickly, because it's currently going in a downturn, okay? So you want to keep that in mind. You want to understand that. That just means, again, that you're gonna have to get the property at a really cheap price, so this right here doesn't affect you, okay? And you can actually ask or compensate so that you don't lose out on this percentage. So now over here, so we have a few of these that are going on 10% up, which is really, really good. It's a really hot market. It's a really good area. This is gonna help you determine different markets, okay? There's more information that you can click here. In order, again, this is going to help you to see how many days averagely is taken on the market for you to sell these properties. So this is one of the things that we were looking on the other web page, that the average days on the market is 63. So it's actually very accurate, right? Because this all right here, it's actually a lot. There's a lot of cities in this area. Now look at here, Tallahassee. So if you're in Tallahassee and you're investing in Tallahassee, it's a really good metro area for you to invest, because the houses there are going to sell a lot faster, a lot quicker. Tallahassee seems like right now it's trending. So it's a really good market for you to buy properties at a cheap price and sell them. It seems like that's one of the hottest market in the state of Florida right now. And there's a few that follow, but this is going to give you a really good understanding of your own area. And as a matter of fact, If you're invested in the whole state, if you're looking at the whole state, and let's say you live over here, but you want to invest over here, it's definitely possible. It's just a few hours away. You just have to do the same research. Now you can also select the information specifically. So this is telling you that the days on the market has gone up by 23%. So that means it doesn't even last that long. 39 days on the market, we already saw that. Days on the market trend. So, well, a lot of information. I guess each represents a city. Yep, it does. Let's see what else information we got here. So, I mean, again, this is a lot of things that you can look. Medium listing price. Also, if it has gone down or up, so you can select your specific area here, I believe. So let's look for Panama City, which was close to Tallahassee as well. So you can look that the prices have also gone up, right? This is how you can tell whenever you're in a good market or not. You want to make sure you use all of this information in order to understand and be able to make the right investment. Okay, so now that you know and understand how you're going to be able to maximize these free tools online, now I'm going to teach you how to actually look for the properties that we want to look for. So now with the tools that we have used, we're going to be looking for distressed properties. Keep in mind that distress is going to be the main word or the main type of properties that you're going to be looking for, okay? Because these are the properties that actually need the full rehab for the most part. There's a couple different properties that you can get, such as vacant houses, properties that were rented by different people, but they were just not really maintained. I mean, those are in the same category as distressed properties, but it's a different type of search, okay? So with the tools, there's a specific words that I want you to utilize in order for you to find the right properties that you're looking for on the resources that we have online, such as Zillow, Redfin, Realtor.com, and so on. But mostly Zillow is going to be the best option when it comes to this. You're going to find your own niche, your own best option. Maybe depending on the market, there may be a preferred way that you're going to be using. But for right now, we're going to be using these specific words, and then I'm going to show you what it's going to look like when you search for them. So number one is going to be fixer-upper. These are properties that are specifically described as fixer-uppers. So that's all you're going to get. Handyman special, for the most part, those properties, the ones that are handyman special, means that it truly needs a lot of work. Like it's just completely destroyed for the most part. Maybe the house got burned, and it's gonna need major repairs. And this is when you want to make relationships, right, with contractors, so that they can give you a quote on how much it's gonna be for you to be able to fix the property for, how much they're gonna charge you. Renovation project, it's another different way, another different word that you're going to be using. Again, the reason why you want to search those specific words is because it's part of the description of these properties, and that's exactly what's going to pop up. Okay, needs TLC, which stands for tender loving care. Same thing, needs upgrades. As is, potential investment opportunity, unfinished, handyman buyer. Again, these are really different terms that you're going to be using when you're looking for these properties. I'm going to try just a few to show you what exactly that looks like, and then we're going to be able to find these properties. And we're going to use the same zip code that we were using. All right, so once you get to Zillow.com, these are things that I'm going to change right now. So for example, sold. Now we're going to look at properties that are for sale. This right here, we're not going to be specific. We're just going to see everything that they have. We're going to apply it. Home type, we're only going to be looking for houses, okay? None of these things right here. So sometimes maybe even apartments, depending on the area that you're looking for. And then click on that, search. So there's a few over here that you're going to see. Wow, beautiful property over here. But now here's where you do the trick, okay? You go to more, you click on more, and then you scroll all the way down, and here's where you're going to implement the words that I was telling you about. So TLC, let's see what it shows up. Okay, so that's interesting. Very interesting. But this is one actually. This one right here probably has it over there. So look, the house has huge, peaceful, private backyard fruits. The house has no central AC, has window units. Property needs TLC, seller is motivated, price reduced, quick sale, please send your best offer. So, I mean, they're asking for a lot of money, okay? We're looking at the property here. The property definitely needs a full rehab, old kitchen, same thing with countertops. Those are not probably granite. Very, very old looking, very old looking house. Look at these bathrooms, very nasty bathroom, but this is where you see a lot of opportunity. Now, when you look here, it's been on the market on Zillow for 200 days, so that's good. Nobody wants to buy the property just yet. And then let's take a look at when the property was listed. So it seems like they had it at 900 and then they increased the price and then they lowered the price again. So very interesting. As a matter of fact, they were asking almost $2 million for that property, which is insane. It's completely crazy. Now you can actually see some of these properties here, okay? And these properties here are renovated in that area, but look how they look. And they're asking, wow, beautiful property. And they're asking exactly 1 million. So this property over there that we were just looking at, they're asking too much as it is right now. And we'll actually keep this property here. We'll remember this property so that we can go over on how to calculate the best offer for this property specifically, okay? So that's one sample that we can use from there. So we close. Let's actually try something different. As is. So we found a couple here, very interesting, because this property is actually completely renovated. I don't know why they have it as is here, but look at this one here. Now it is a bigger house, okay? Definitely needs a lot of work on that property. Same thing here. There's a few properties here. So these two properties, let's actually click on this one and see what's going on here. Wow, it's just a really old property. I mean, I don't even like the structure of this property. You can tell that it's going to need a lot of work, okay? A lot of potential, okay? Because the area, it's a really good area. They don't have a lot of pictures on here. And look, it says it here. Attention investors, fantastic opportunity to purchase a property in the international recognized popular Wynwood community. So that is a really good community, to be honest. It's a really good community. The sale is as is with the right to do an inspection. The inspection is really good because you can determine a better price. Here's the information of the realtor who has it on the market. And then you can kind of see here, wow, what a big jump. I think it's because the asking price that they were doing, it's really high. Now look, they were asking even more when they first listed the property on the market. So wow, tremendous. That is big. You can actually see this lot here sold for 1.5 million. Very interesting. And there's another property here in the market for 1.3, and then one that sold for $1 million. So definitely this may be a really good opportunity as a fixer-upper. You can actually see that they're building something next to it. Maybe it's another residential home. It may be this lot over here. That's actually probably what it is. Yep, that's exactly what it is. They bought the lot for 1.5 million, which is why they're trying to sell, trying to get as much as possible for that property. But honestly, it's way too risky because they're asking way too much for a property like that. Okay, I'm not saying no one's gonna buy it, but me personally, as an investor, I would not pay that price for that property. Definitely not. And because it has a structure, you definitely want to make sure you put a lot of money and make it unique. You want to make this opportunity very unique to be able to see a lot of profits. And again, those are just two examples that we were able to find. I'm sure when you start, I was just looking at one zip code, one specific area. But when you open it up to a few more zip codes in the area, some cities have more zip codes, that's when you're going to be able to find different properties based on their description. And these are some of the things that you can use to be able to find these properties. Now, there's a couple things. This is one of the ways that you can use to find these type of properties. Okay, they're going to be MLS listings. You can also find off-market properties that are distressed. You can also find vacant properties that are distressed. They're completely vacant. So you have to do skip tracing, which we will get into that. But this is one of the major ways that you can find a property, a really good opportunity. And you can also negotiate with the sales representative, which in this case will be a realtor. You talk to them directly, you tell them what you're looking for, and then you let them know, hey, you know what? This is what I will be willing to pay for this property because of this, this, and that. And you can also create more relationships with them for the future that may be able to work the best way possible for you. Now we're going to get into calculating the maximum allowance offer, the maximum offer that you can make in order to make profits. Okay, this is extremely important because once you start doing this, once you start implementing this, now you're going to know the math. Now the math, you want to do it many times, multiple times, because once you start doing it, it becomes second nature to you. And this is where we want to get to the point where you're looking just at a property and you completely understand, or you completely know how much the property is going to be once you sell the property, and how much you're going to offer for that property, that you feel very confident that the price, it's a really good price. So this is just to give you an example, but we're going to go over it again, and especially with the sample that we found from the other property that we were looking at. Okay, so the example, the after repair value has the words over here. It's $500,000. Closing cost is always going to be 10%. So 6% is going to be towards realtor fees, okay? 3 for the buyer and 3 for the seller realtor. And then this is just, again, an example. Repair cost or repair price is going to be $50,000. Holding cost, so basically holding cost is when you have a loan on the property. In this case, I'm not using a loan. I'm just saying that we're buying the property cash. But again, you're going to use a loan. But for the purpose of the sample, we're going to say we're buying the property cash. It's $0. And then the profits, you decide how much profits you want to make. Okay, so you basically decide what a really good deal may be to you. There's a couple of reasons why. Okay, number one, let's say that you're not putting any of your own money, none. Okay, but you know somebody who has the money. You know somebody who works all the time and they have money, and you can talk to them about the investing opportunity that you have for them. And you tell them, you know what? Here's the property that I got. Here's the numbers that I got off this property, and there's going to be $100,000 of profits, net profits. After all the expenses, it's going to be $100,000 left. I want to give you $50,000 if you let me borrow the money. I basically found the property, I manage the property, I do everything, absolutely everything, so that you don't have to worry at all. Okay, I work with the people who are going to be doing the flipping inside the property and so on. Again, $50,000. How long is it going to take? It's going to take total is going to take me 2 months. Okay, saying that you bought it at a really good price, you negotiated at a really good price, and then you finish it in 3 weeks, you put it in the market, and then it sells in 45 days. Okay, so that's assuming that it took you 6 months. That's assuming that it took you 2 months to hold the property, and that person is making $50,000. That means $25,000 per month for just using their money. All right, so this may be something that is going to be really attractable. And the purchase price on this property was $300,000. So how did we get to that? We got to that because when you decided that you wanted to make minimum $100,000 profits, that's when you subtract that from the math so that you can get the maximum allow offer. So we're going to go here. You're going to take a look at this over here. Again, this is a little more of a better breakdown. So $500,000 is going to be the sales price, right? The after repair value. And then closing the realtor fees, which is 10%. So you're going to take out 10%, or you're going to multiply times 90, whichever you want to do, is going to equal to $50,000. So now that means that you're going to receive $450,000 back. And repairs was $50,000. So now there's $400,000 left. You wanted to make $100,000 minimum. That means that the maximum offer that you can make on this property for you to cover all this closing costs, the repairs, and the profits, your maximum offer is going to be $300,000. That means that whenever you're negotiating the property, this is the price that you're like, you know what, that's the maximum that I'm willing to pay for that property. That's the very top, the very maximum. That means that you can start the negotiations maybe at 200, 250,000. And I'm telling you, it's not impossible. I've done this multiple times. And this is what people do every single day. Okay? You need to understand this. People do this every single day. It does happen. It does exist. And you can also make it happen. All right? So we're going to go over the sample that we were looking at on the property that needs the rehab. Okay, so I'm going to be sharing the maximum offer on this property. All right? Now we are going to assume that the property has 1,600 square feet. So similar to the property that we were looking at, that it was completely rehabbed. So 3x2, 1,600 square feet. We're going to assume that it's the exact same. Now remember, this property needs a full rehab, okay? So it is a little bit more expensive area. I told you before you want to do $40 to $50 a square feet. So we're going to use $50 here because what I will do is I will rehab the whole property. I mean, I will spend a lot of money on this property alone, okay? So we're going to use the average math that I use. This is the math that you want to also use to be able to calculate your offers, okay? So I'm going to show you here in the screen. Okay, so the maximum price that we can sell this property for is probably going to be $1 million because this property fully renovated, they're asking $1,080,000. So we're going to just assume that we can sell this property for $1 million. So ARP, $1 million. Okay, now it's a 3x2, right? And it has we say it has a 1,600 square feet. Okay, so keeping that in mind, something we want to do is we want to multiply the 1,600 times $50 because this is how we're going to estimate the repair cost. So get your calculators and put 1,600 times $50. That means it's going to be $80,000. Okay, for you to do a full rehab of this property is going to cost $80,000. Now here's the other thing, because it is you want to keep yourself safe, right? You can see here there's a lot of detail, right? A lot of custom made things for this to be able to happen. So let's add, okay, just for safety, it is $80,000. Add another, you can guess it on your own. Add another $20,000. Okay, so let's assume that the actual repair cost on this property is going to be $100,000. Keeping that in mind, let's say that we were going to sell the property for $1 million. The first thing you want to calculate is going to be the closing cost, which is going to be 10%. So what you do is you put $1 million in your calculator. Okay, out of the $1 million, you want to subtract that by 10%. And that's going to equal to $900,000. That means that the closing cost is going to be a total, that's realtor fees and closing costs from the title agency. It's going to be $100,000. Okay, so $100,000, and then from the $100,000, you also have to put on repairs. It's going to be another $100,000. A lot of 100,000s, and the other thing you want to do is your profits. So this is a much more expensive area. $1 million, it's a lot of money. So I will actually consider making minimum $300,000 here. $100,000 is going to be too little for this type of investment. And too much of a risk as well, because there's a lot of money you're going to have to come up with, especially if you're going to be working with somebody else. So let's say I want to make $300,000, okay? My profits. What I really want to make is going to be $300,000. So we're going to put here profits, $300,000, okay? Minimum. So we're going to do this. This is going to be the maximum allowing offer. And what you do is you subtract all of this for you to get the offer that you're going to be making, okay? So $1,000,000 minus 100 minus another 100 minus $300,000. That means that the offer that you want to make on this property is going to be $500,000. Okay, and it's going to be $500,000 the most, because I'm talking about me. I want to make minimum $300,000 in this investment, because if I have to split with somebody who's going to bring in the money, I want to give them minimum $150,000 for them to invest. And again, this is not impossible. People do this every single day. Every single day. The higher the risk, the more higher the reward. Okay? And this is a high risk because it's $1,000,000 property. It's a different type of buyer. Okay, that's another thing that I forgot to mention. It's not going to be the average buyer. You know, the national income, the average income that we were talking about in the US for a person is $30,000. In Florida, the household income is about $67,000 or $61,000. So again, this is going to be a different buyer. This is going to be somebody that makes probably over $100,000 in income. Okay, probably, to be honest, probably $120,000 household income. For them to be able to make a payment on a mortgage, that's going to be $6,000, almost $7,000 a month, because we're looking here. That's the estimated payment price. Okay, so those are things that you want to keep in mind. This is a different buyer, not the average single family flip, and the risk, it's a little higher. So again, the profits have to be even major. And again, you wouldn't go wrong when you're buying at the right price. I think buying this property for $500,000 would be a great and a fantastic deal. And most likely it's going to take a little bit longer for the property to sell, because again, you're going to be expecting a different buyer. Okay, so this is how you calculate the maximum allowed offer. This is how you calculate the maximum allowed offer that you can make on this deal. This is just from analyzing this deal. Every property is going to be very, very similar, so you want to do the exact same strategy for you to calculate. Okay, now again, one of the things that I use here is I did it very basic, right? But I was able to see that there's two properties in the area, because it shows you down here, and those two properties are selling for a little bit over $1 million. They're currently for sale. They haven't sold. And that's what I'm using as an estimate. Now look here, when I scroll down, there's two properties that sold, one for $750,000 and one for $1.2 million. Let's take a look at the $1.2 million. Wow, what a beautiful property. So again, this is going to be a really good example on why you need to invest $100,000 in this property. And this property has 1,600 square feet, so most likely it's very similar square footage. It's in the same neighborhood. Very, very important that you know that you implement that, right? Let's take a look at the $750,000 property that sold recently. Well, within the last couple of months. Let's see. We'll scroll down. 750,000. Let's click on that. So probably an investor bought this property. I may be wrong, but we can actually Google this. Actually, Redfin, sometimes when the property sells very recently, they take out the pictures of what it looks like completely renovated. Okay, so let's take a look at that here. This won't change the price. No, it's the exact same. There's no photos, and because there's no photos, most likely an investor bought the property. Let's take a look at when they bought it. Okay, so it's been close to it's been a lot of months. So who knows if somebody's working in this property. We're not sure exactly what they're doing, but the other example was a lot better. The property that sold for $1.2 million, it was a lot better. And now you can, again, it gives you an estimate. It gives you an estimate that it is very possible for you to sell that property in $1 million by investing $100,000. You did take a look at the on what they did, and it's definitely an expensive flip. So $50 is definitely very, very doable. And as you go on, you're going to be able to learn. You're going to be able to learn the specifics of how much each material is going to cost you. Okay, and I'm going to give you an overall idea later on, but $50 is going to be a really good guess for a full rehab. When it's a light rehab, depending on the area, right now I will be using like $30 compared to the $50, so that's $20 more, or even $25, right? So those are the things that I want you to keep in mind. Okay, and that's how you are going to be able to calculate an average maximum allowance. Okay, and that's how you're going to be able to calculate a maximum allow offer. Okay, again, the math is always going to be completely different depending on what you're doing, how you're doing it, and so on. Now let's talk about conducting multiple property inspections. Okay, so when you're negotiating, here we're getting to the point of the negotiation. Okay, because it's extremely important that you know what the owner is going to tell you, and again, by listening, this is going to help you in the future during the closing process. So the first is you want to ask the seller directly for the condition of the property or multiple properties if they have. Now, for example, if the seller is living in the property and then you ask him, so tell me a little bit about the property. How long have you been living in the property? Oh, I've been living in the property for 30 years. I've been here all my life, and now I just can't afford the house anymore because it's deteriorating. I have a hole in the roof. There's water leaking in, and so on. So this is going to help you know. Okay, wow. If there's water coming in, that means that the roof needs to be replaced, and maybe even more than the roof alone because now it's leaking into the house. I haven't replaced the AC, or maybe they tell you I have window units AC because the central AC stopped working a couple years ago and I just couldn't afford it. So again, things like that are going to help you negotiate the price, okay, on the property, because when you're negotiating, you can actually talk up to the seller about how, wow, so this property is going to need a lot of money. How much do you think the property is going to need? Or have you gotten quotes on how much this is going to cost you by any chance? So this is going to help you. This conversation is going to help you. And it's going to help you because in a way, the seller automatically is going to be like, yeah, property needs a lot of money to be rehabbed. So they're going to be more realistic on the offer, unlike the sample that I show you on Zillow on that property. They're being very unrealistic on that price. Okay, very unrealistic. But anyways, going to that, you want them to talk. You want them to talk about the property as much as possible so that you can determine, you can know or estimate how much it's going to cost for you to rehab the property by getting the information that you need from the seller. They're going to, I mean, of course, even if you know how many bedrooms he has already, how many bathrooms, how many square footage, you still want to ask these questions as if you don't know. Even though you already did your research on Zillow and the other social platforms, the other sources, the other resources, the online resources, you still want to get as much as information out. Maybe they did a little extension and they didn't get a permit for it. You want to know everything. So you want to listen. You want to ask on purpose for the inspection while you're walking the property. And lastly, you're going to hire a property inspector because they're going to help you by saying and taking notes. Wow, this property needs a new roof. This property needs a new bathroom. This property is destroyed. You know what I mean? So again, this is going to help you even negotiate a better price on the property that you're inspecting. Now that you're paying an inspector, also the seller also knows that you're serious about buying the property. Very serious. So this is going to help you negotiate. One of the main roles of a home inspection is that anything that may not be visible, the inspector is probably going to be able to find it for you. And again, this is going to help you renegotiate a better price or just walk away. Look, walk away. If the property does not make sense and the seller does not want to change the price, and you already have a specific budget and a specific amount that you want to make, don't risk it. Just walk away. There's going to be more properties, more opportunities available. But now, what if the seller says, you know what? Wow, I didn't even know the property had termites. But you already know that by getting rid of the termites is going to cost maybe another $10,000. Just renegotiate the price. That's all you have to do. and the seller might be willing to negotiate the price if they have to go somewhere, or if they are tired of living the way they're living, right? A property that's completely destroyed, nobody wants to live in that condition, or at least a lot of people don't. You're gonna have a better idea of what items you're gonna have to do properly. So again, if the property has termites and it was not really visible, for example, you're not gonna be able to sell the property if it has termites. So it's important that the inspector finds things such as that so that you can take care of it and it doesn't become a future problem when you're fixing the property and now you have to get rid of termites, okay? So extremely important that you do this type of inspections in order to help you renegotiate a better price if you have to, okay? And then it's a verifier that the calculations, the math that you did, the maximum allowed offer that you did, it's definitely doable or it's not doable. It's gonna help you determine either or. And this is what's going to allow for you to make the right offer and buy the property at the right price and be able to make your profits. Because remember, in single family flips, you're truly making your money when you're buying the property, not when you're selling the property. You make your money when you're buying, not selling. Now, let's say that everything went well. You were able to negotiate the property at a really good price. Let's say you negotiated that property that we were doing as an example for $500,000 maximum offer, and everything else makes sense. Now you want to start looking for a hard money lender. You want to call multiple hard money lenders. You can find them on Google. I'm also going to provide a list of my contacts, my lenders. But again, this is just for additional purposes. You want to look for local ones as well. You want to create relationships as much as possible with the people who are around you in that area. Or you want to partner up with somebody and you make the terms. So again, you making the terms of splitting the profits 50-50 is actually very, very common because that's how I got started. That's how I did it. I was splitting profits 50-50 and the other investor was putting just all the money while I was putting my time, finding the properties, managing the projects and selling the properties. Basically, I was doing all the work and they were just waiting for their check to come in. And you can make the same thing happen. So you might be able to partner up with different people, okay? Now, you can do a combination of both. So for example, let's say that this is another thing that I've done very, very often, multiple times. And it's, you find a hard money lender, right? And the hard money lender tells you that you're gonna have to put 20% down on this property for you to be able to buy it. So that's about 100,000, I believe. So 100,000. Now you tell the investor, another investor, right, that has maybe the full rehab cost, maybe $250,000, maybe $300,000 available to spend. So you tell the other investor, hey, I found this property, got it under contract. I have the lender who's going to give me the money, and I want to add you to this deal. I want you to make money, and all you have to put is the down payment, which is 20%, 100,000, and then the repair. And I do all the work. I manage. I make sure everybody's turning the work on time. I put the property on sale with my realtor, and I make the profits. So now this person invested close to $250,000, $300,000 to make another $150,000. So those are big gains, especially for that person who's doing nothing. Okay, they're big gains. So you can do a combination of these things. You need to become more creative when you're finding all these deals. That's exactly what you want to do. This information that I'm giving you here is extremely important for you to be successful. So you need to make sure you implement everything that you can to make any deal happen. When you have the right deal under contract, there is no doubt in my mind that this is going to escape your hands. Okay? There's no doubt, because you're going to find somebody who wants to invest with you. You're going to find somebody that wants to invest that money and make money with you, especially when they don't have to worry about the project being managed. One of the few things that I want to share here, financial considerations when flipping the property. Every time you make money, you got to pay taxes. You got to find an accounting that is going to be able to help you. So you want to make sure that they specialize in real estate investing. They work with real estate investors because they're going to help you save the most money so you don't have to pay so much in taxes. They're going to help you do the right deductions. I'm not an expert in taxes. That's why you need to find one. You need to start creating your team. Who's going to be the right person? You don't want the person who's been doing your taxes for many, many years and they don't know what to do, because they're not going to know what to do. So find a specialist to help you. Few legal considerations regarding real estate is going to be the transactions, the contracts during the flip. I'm gonna show you a few of my agreements. I'm gonna share them with you as well. But depending on the state, some of the things might be a little different. You want to make sure that you are very well informed at all times. Okay, not just the market analysis. You just want to make sure you're aware of everything legally that's happening in the area. Every county, every state is going to be completely different. Okay, and in order for you to better understand, working with the title company or a real estate attorney is going to be extremely important, because working with a title company, they're going to be able to see what things are in order, in place with the property, making sure that you buy the property with no problems, that it gets transferred to your name and your partner's name with no problems, no issues. So again, you need to work with professionals, okay? They're gonna help you. Again, it's just part of the process. It's just part of the process. This is very simple once you start doing it multiple times, okay? So find a title company that's gonna help you, or if you are in a state where there's no title companies and you have to do it through a real estate attorney, then just find them on Google. Google everything that you can. That's all you have to do. Now, with this information that I just gave you, you're going to be more than set, more than prepared to start doing this on your own. You're going to be more than prepared to start calculating the offers. Just do the math, practice the math in order for you to be able to get accustomed to it, get used to it. Do not stop. This is the one thing. Analyze at least 3 deals every single day. It takes just 5 minutes, 10 minutes of your time. Analyze 3 deals every day until you become an expert at calculating, okay? And use those scenarios that I gave you. Find them in your local area, find them on Zillow, find them on Redfin, whichever is gonna be the easiest for you to be able to use, and start doing these calculations, okay? Good luck.